Sanjay Dutt, a director of Quantum Securities, is our next guest who joins us on the show. Hi, Sanjay. Good morning. This is insanity. I mean, the Sensex has risen 1,500 points in less than 3 days. Do you think the poll outcome has finally been factored into the market, the exit poll outcome, that is?
Yes, I think the poll outcome is completely in the price. In fact, I'm a little worried as to, if we have what we saw in 2004, 2009, the polls didn't match up to the actual results or were way off at times also. If there are any negative surprises, there would be problems. Positive surprises, I don't think so, because, markets are factoring a NDA-led government with a clean, clear majority. So in my opinion, in the short term, maximum euphoria or another rally about 100-odd points, and that's we get stretched on the fundamentals because markets are tending to ignore the real fundamentals in the short term. We've had the industrial production numbers, we've had inflation still a problem yesterday, which means RBI won't let go as yet. Then RBI at this point of time is fighting the rupee-dollar situation. We've already seen about $8 billion odd being used by RBI, and RBI is pretty clear that it's not going to really give up that level and expect the rupee to come down to 54, 55 levels, because then again the inflation issues kicked in. Diesel prices went up yesterday, no one noticed. So finally reality will start to hit home as results are out of the way.
But Sanjay, good morning. Isn't there a chance that we are just better placed to tackle these problems? I mean, I wallow in these fundamentals all the time. IIP and CPI are bread and butter for me. But couldn't this be compared to a UTI bank in '97 when there was a change of headship and PJ Nayak took over? This is a corporate governance change from a corporate point of view, possibly. So it doesn't feel like a 2004 when we were nifty at 2000 and before the year went out we were at 3000.
I agree with what you're saying, Lata, but there is no magic wand that any leader, the Prime Minister or minister sitting up there have to some of the fundamental problems that are plaguing the company, particularly in terms of mounting debt, inflation, etc. There are no quick fix solutions. It's very easy to say that we'll run my cabinet ministers. I was just hearing my cabinet ministers would be my chief ministers. But you can understand how diverse and disparate a environment would be when you can't really have existing committees that normally government forms to be able to take a decision, and when you will end up in that kind of situation. I know that's political speak, but I think it's not going to be easy to solve those problems. Yes, sentiment change is there. Yes, decisive leadership is an excellent thing that's happening, if it does happen on May 16th, which I think it will. But I don't think anyone has a magic wand as yet, because there is a tough struggle ahead, both from a macro standpoint as well as individual company balance sheets and bank balance sheets, which are plagued with a lot of things. And most of those things are already in the price now. While I was the one at 5,500, 6,000 Nifty felt that it shouldn't be where it is, but I also now would say that in the short term, 7,400, 7,500 is not justified.
Yeah, that's true, Sanjay. We remember those times when the market was at 5,500 and you said, no, it deserves to be much higher. But you said that eventually the fundamental problems will start to hit home. What do you mean by that? For the rest of the year, do you see this market enter into a consolidation phase as the new government battles with the fundamental issues? Or could we be in for some sort of a correction?
I think consolidation phase. I don't see the markets going below, if of course we are going by the assumption that the exit polls are correct and we have a clear majority and decisive leadership in the form of Mr. Modi, which we all love, and I would like that to be. But I think in the short term, at least in the 6 months, or which means the rest of the year, we would get into a consolidation zone. There would be stock-specific opportunities to look at. From an index standpoint, I don't think we'll be up another 10%, or we may be up another 9% or whatever. So from that perspective, I think consolidation would be the right thing that will happen somewhere in the 6,800, 7,400 range, as individual stocks keep giving us opportunities to make money. So therefore we got to go bottom up now and look where the opportunity is, whether it's capital goods, whether it's banking, whether it's, some of the other cyclical bets which are still beaten down. From an index standpoint, I don't think there is too much of an upside in the remaining in the year. Barring, of course, some more positive issues that come up, which we can't game right now.
Okay, so where would be the individual buy gaps, valuation gaps even now? Would it be in the infra space, say the IRB infras or the GMRs or the GVKs or the Lancos, as maybe some gas price or some power price issues get settled? Is that where you're seeing valuation gaps, or are you seeing them in PSU banks or the PFC REC types?
I think, Lata, a mix of everything. They are there across the sectors. Companies which were having issues related to liquidity, cash flows, etc., particularly related to government contracts and government payments, government decisions, those probably would be the ones which will get re-rated because, government would start functioning. And I'm quite confident that given Mr. Modi's style, there would be quick decisions, he would take charge, things would start happening, and particularly on the infrastructure front and the companies which deal with the government. Similarly, I feel the oil PSU companies would get sorted out very soon because, if the government has to talk about the macro adjustments, talk about inflation, and talk about, sorting out other macro issues relating to subsidies, etc., the oil companies will have to be sorted out. We can't just live this way. So therefore, I think there are going to be opportunities there. Similarly, in banks, some of the second-tier banks, which haven't really caught up as yet with the state banks in terms of the rally, they will be re-rated. So one would have to look at pockets, companies which are not really with bloated balance sheets, companies which would benefit from the change in regime in terms of sectoral focus, whether it's infrastructure, capital goods, banking, those kind of companies I think would give opportunities. Or opportunities are there right now to look at.
By the way, the market is yet again making that attempt to get back to its highs. So 7100 was hit again on the Nifty, and the Sensex is back with a 300-point gain, so not giving up on any of its laurels that it saw in early morning trade. And BHEL, by the way, the cabinet is expected to ratify that 4.6% stake sale in BHEL today at a meeting. So BHEL up almost about 9% in anticipation of that. And NTPC, CLSA has gone ahead and upgraded NTPC to a buy, so 4.5% higher is what you're seeing on NTPC. But Sanjay, what do you do with your classic defensive names? They've moved to the back burner in anticipation of so much high beta movement. Do you, now start to look back there because of the caution you just alluded to? And if yes, which pockets would they be?
I think one would be, equal weight or underweight to those stocks in portfolios because there is still more steam left in the high beta momentum and the cyclical names because they have been beaten down. They need to correct, and they'll be the biggest beneficiary of policy action. So therefore, and I think more than anything else, for me, the primary reason why the defensives really would not outperform is the fact there's still over ownership there. If you look at most mutual fund FI portfolios, technology, pharmaceutical, they're all hiding in there. FMCG, big names, they're all hiding in there. So I think those over-ownership is one problem which is plaguing them. Retail doesn't want to buy them, obviously, at this price, and retail has never been interested in buying them. So the focus would be more on cyclicals, banking, something like metals, where I think there would be some issues being resolved. That's where I think outperformance would be in the near short term till the valuations start getting stretched, and then we again get into a rotation game of defensives trying to do the catch up. So it's this typical bull market, rotation, one step up, two steps up, one step back in various sectors will carry on. And that's what consolidation is all about.
Well, just news coming in, Rima's filing, Stanchart has raised the price target on Adani Enterprises from 291 to 575 rupees. Actually, in that vein, Sanjay, last question to you. A lot of these road guys are actually doing very well today. Nagarjun Construction up 7.3%, Hindustan Construction up 7%, BF Utilities, I think it's the Nandi Industrial Corridor guys, 7.3% up, IRB up 7.3%. Would you touch any of the road guys? Any names?
I think selectively, not these, top rung names. There are a lot of other smaller names also which I would want to look at, because they would be the one which will have maximum traction in terms of margin and cash recoveries from the government and orders. And they are the ones who've come into sub-$100 million kind of market caps. But it's difficult to game them, difficult to analyze them. But someone from my kind of an investment profile and my kind of, ability, probably I would look at those. But even these names would do well, because, like I've been saying, that issues related to the government and decisions and things that have been pending are surely going to be resolved by the new Prime Minister and the new leadership, because these are the areas which need immediate focus, infrastructure and roads being the biggest one.
In your recent interactions with the informed circles, Sanjay, what is the sense you're getting about the movement we've seen in the last couple of days? Is it purely FII-led money that's come in, or do you see a lot of HNIs increase participation, some retail money come into the market as well?
There isn't too much of retail money. Retail is coming back and showing interest. Retail is slowly getting convinced that the political dispensation is going to be favorable for the economy and things are going to happen. But it's primarily led by FI interest coming in, along with the traditional smart money out of the Lal Street. They are in the warehousing go-go mode. So I think it's a combination of these two that we've seen, which has taken the Nifty up in the last 300-400 points.
All right, leave it at that. Thank you very much for joining us, Sanjay Dutt, and taking us through perhaps welcome caution that at this point in time, maybe you also want to see what you are buying at these elevated levels.